How'd you come up with the list?
Well, we've written about a number of these companies before, and we talked to a lot of investors and analysts and tried to come up with some ideas which we think can beat the market. It's not easy given how high-priced things are right now, but I think many of these stocks are undervalued right now.
You say there's a tilt towards value on the list, so you are among the believers that the value runway has some length to it.
I think so, and I think companies like Berkshire Hathaway or ViacomCBS or even Alphabet, which is kind of a growth at a reasonable price company, look pretty good right now.
Average dividend yield, 1.8%. Everything has to pay a dividend to make this list?
No, because a couple stocks like Alphabet don't pay dividends,
right.
So it doesn't have to be. Berkshire Hathaway doesn't pay a dividend either.
What do we think of the list, Josh?
Are you starting with a screen and then doing qualitative conversations about these names? Like, if you're an investor watching at home wondering if they should get involved in the names on the list, where is the starting point?
Well, I mean, we do screens. We also talk to a lot of investors and analysts and try to come up with some ideas which are timely and topical and we think are pretty attractive and offer a pretty good risk reward.
Which is the one that you say, if somebody wants the most potential upside, which is the one they should go for?
I think ViacomCBS could have a lot of upside right now. It's out of favor right now. It's a very low valuation. It's 6 times forward earnings right now.
Nobody wants it.
Nobody wants it right now. It's got a tenth the market cap of Disney right now. So, and I think ultimately it might be even acquired.
That's what I mean. You have a provocative thought in that vein. You think that Apple could acquire ViacomCBS?
I mean, I don't think anytime soon, but I think ultimately it could. I think it has its new streaming service, and I wonder how much traction Apple's going to be able to get with it against Disney and Netflix. And I think it's a great content factory at ViacomCBS, and it's pretty attractively priced. And Apple's $1.2 trillion market cap, and ViacomCBS is just $25 billion.
Joe?
So do you think that initiates a lot of M&A in the traditional media space?
I don't think so. I think there are not many media companies left to be bought, but I think, ViacomCBS is one of the last ones out there that I think is attractive enough that could be bought. I think it's controlled, by the Shari Redstone and the Redstone family. I don't think they want to sell it anytime soon, but I think ultimately in the next year or two, they may realize that they need scale and that they'll take a bid from a larger company.
United Technologies got lambasted by, your words, not mine, by the activists that weren't thrilled with the Raytheon deal, but you have it on your list, and the stock looks great technically. What would you say about UTX?
Well, I think Wall Street's coming around to the deal. They initially hated it, but I think now people are saying that the deal looks pretty good. It creates a combined and attractive defense and aerospace company, and plus you'll be getting the Carrier and Otis spinoffs next year. So you have 3 pieces of paper in a year, and I think all 3 of them are going to be leaders in their field and look pretty good.
Andrew, we appreciate you coming in. Thanks so much.